Hi, my name is Jim Brees from GreenGrowth CPAs, and today I want to talk to you about how being a successful cannabis company will impact the frequency and importance of your tax payments. So, as you know, cannabis operators have to pay many different types of taxes. From sales tax to excise tax, the system can be quite complex, and once your cannabis company starts to thrive, the tax system becomes even more complicated. California's sales tax is a great example of where successful cannabis entrepreneurs get tripped up with being compliant while maximizing their profit. Now, California's state sales tax for cannabis operators is 7.25%, 6% state tax plus a 1.25% mandatory local tax. And depending on where your business is located, the local tax may be an additional 3% to well over 10%. Further, for cannabis operators who are achieving a certain amount of sales each month, you will be required to pay your sales tax monthly rather than quarterly. So in this video, I want to walk you through how the monthly process actually works and how our team can help you manage this process effectively. So before we go into this, I need to let you know that the information contained in this video is meant for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. So with that out of the way, let's hop right in. So why is proper tax reporting important? Well, as the saying goes, there are only two things certain in life: death and taxes. And taxes are the number one reason why most cannabis businesses fail. And the IRS is not shy about auditing cannabis operators, and 280E is one of the primary tools the government uses to penalize legal cannabis business operators. This burdensome regulation makes a lot of money for the IRS and local governments in the form of taxes, fees, and fines. So much so that Colorado is able to fix roads that aren't even broken because they have so much tax revenue. And it's important to protect your business as much as possible from the tax authorities, and the first step is to understand the cannabis sales tax and commit to paying your taxes monthly. And as a side note, having a CPA prepare your taxes is better than doing them by yourself because they will use an accepted methodology for higher assurance if you ever experience an audit. First, let's answer the question, what is cannabis sales tax? Now, it sounds self-explanatory, but let me explain some additional details. So as previously mentioned, the state sales tax rate varies slightly depending on where you are. And most cannabis organizations can expect to pay between 8 and 10% of their sales. And sales tax is charged at the cannabis dispensary on top of the sales price and on top of the cannabis business tax. Cannabis sales tax in California is remitted and paid to the CDTFA, and when you apply for your sales tax remit, the administration will ask you a series of questions to see what your tax payment schedule should be. And typically, most companies pay their taxes quarterly, meaning that their taxes are due on April 30th, July 31st, October 31st, and January 31st for the periods Q1, Q2, Q3, and Q4, respectively. Now, there are two other scenarios. First, if you have a low sales volume, meaning you have less than $5,000 in annual sales, then the CDTFA will put you probably on an annual payment schedule. And second, for successful, high sales organizations, it's likely that you'll be asked to pay sales tax monthly to the city and the state. So let's explore what the monthly process looks like and why it's best to have an experienced CPA calculate your tax payments for you. Now, in our experience, many clients are asked to prepay sales tax every single month because they have such high cannabis sales. And that's not a bad thing. But in this instance, the cannabis operator must pay estimated payments for month 1 and month 2 of the quarter that they're in. Then, when the quarterly return is filed, our firm then squares up any discrepancies from the first 2 months of the quarter into the third month's payment. So how do we estimate your month 1 and your month 2 sales tax payments? Well, it's a two-step process. First, one of our CPAs usually taps into your POS software on the 20th day of the month to see what your current run rate of sales is. Then we compare that rate to the past year for the month we're evaluating if you were operational last year. From there, we create an estimate of the payment of, say, ABC dollars to the CDTFA, thereby covering your state sales tax. And we do this for our clients every month so that they can focus on running their business and not worrying about taxes. It's a pretty transparent process, and the CDTFA will let you know that you're subject to prepayments or if there's any changes to the frequency of your payments. But just know that if you don't make your payments on time, then penalties and interest will be assessed. And note that these penalties are compounding, so if you're faced with a fine or any kind of fee, we highly suggest that you pay it right away to avoid those compounding fees or penalties. Now, in addition to paying your state sales tax, cannabis operators must also pay city sales tax, and this rate, frequency, and due date vary depending on your location. For example, say you're based in the city of Vallejo. You're required to file a monthly return based on gross receipts rather than sales, and these returns are due on the 20th of the following month. So I highly suggest getting in touch with one of our experts or your local tax authority to make sure that you know the deadline and the cannabis sales tax rate that you are responsible for. Now, there's a lot of confusion and gray area when preparing for your tax payments to the city, mostly because cannabis is pretty much an all-cash industry, and most cities aren't well equipped to process monthly cash payments. Further, most cities have self-reporting taxes with no audits required, yet. It's likely, however, that California cities are missing out on major tax revenue, and as a result will insist on proper reporting and auditing in the future. So it's best to be rigorous about your tax payments now to make sure that there are no issues down the road as your business grows and flourishes. Now, you're probably asking, how can you make sure that you're paying the actual right amount? Well, first, you need to make sure that you're giving your CPA good information to calculate your taxes with, because if you have bad data to start, you're going to get bad end results. So be sure that you're instituting excellent cash handling practices and create strong SOPs or standard operating procedures around your business. Second, despite having little to no access to a bank account, manage your cash responsibly and make sure everything balances correctly. Third, plan ahead. If you're looking at your cash or your bank account, set up another account or way to have a repository for taxes and put money aside each week so that you're not forced to come up with a huge, large sum of cash all at once when your taxes are due. And lastly, to give yourself peace of mind, engage an account with specific cannabis industry experience who can give you monthly guidance and be by your side in the event that you get audited by the city, the state, or the federal government. Now, hopefully this has brought you some value and helped you get some ideas on how to manage your monthly sales tax payments as a growing cannabis business. And if you think it may be helpful to outsource your CFO duties or your tax duties for your cannabis company, then please get in touch with GreenGrowth CPAs by reaching out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. Have a great day, and we'll talk to you soon.